Hello again, everyone. In this technical analysis of the stock market video, I call it relentless selling because that's exactly what's been going on this last week. What a brutal week. It was the worst week in the stock market, in the Dow and the S&P 500 since 2008, the financial crisis. And we're going to take a look at the S&P today. We're going to look at the daily, the weekly, the Elliott Wave picture, check in on the VIX, look at the high yield bond fund and see what it's doing, the dollar, and then an update on gold. All right, so let's talk about the S&P 500. It was down 104.47 on Friday. Now, what's this dotted line? The dotted line is the low of December 2018. Okay, that huge sell-off that happened, that capitulation, and there's Christmas Eve. And then the very next day, we went just a little bit lower and reversed to the upside. So that's the low everybody's had their eye on. 2350 or 2351. And Wednesday and Thursday, we kind of punched through it, came back above it. Everybody thought, well, maybe we're going to get support. And then Friday, we closed down below it. And so pretty good, strong move to the downside in here. We'll see how much more we got to go. Let's take a look at the weekly. Okay, so here's the weekly view, down 406.10. And there's that December low that we're talking about. So one heck of a downdraft. The last 4 weeks have just been incredible. And just, that's why I'm saying it's relentless, because every time you think you're getting a little bit of a rally, look at this reversal candle right here. The next day you take out the low. Look at this big jump that we had right here. The next day you take out the low. Same thing right here. Big rally to the upside, you take out the low the very next day. So now we're going to see what we've got cooking right now. And when we look at the Elliott Wave picture, this is my least bearish view. Now, I talked about that last week. And I say it's my least bearish view because I think we could be getting close to finishing the 5 waves within intermediate wave 3 down. Okay, so I'm looking for 5 waves down in this first thrust. I think we've had 1, 2. We're working within wave 3, and once this is complete, we'll bounce up and have intermediate wave 4, but then we're going to come back down again. Okay, that's my expectation. So now what am I looking for Monday? Monday, I'm watching this. What looks to me in this 5th wave, it looks like we're doing some kind of little ending diagonal pattern in here. And so I've got my eye on this low right here, which is 2280. Monday morning, it needs to come down and take out 2280 at a minimum. But this intermediate wave 5, because we're looking at a contracting ending diagonal, this intermediate wave 5 can't be longer than intermediate wave 3. So the low on this, so I look for this, what I look at is I say, okay, where's 5 equal 3? Let's look at 5 to 3. Well, here's where 5 would equal 3. Now I'm talking about this little Roman numeral 5, minute wave 5 versus minute wave 3, okay? 2202.87. We punch, if the selling really accelerates and we come down below 2202, then I think the odds favor that the relentless selling is continuing and we are most likely in a much stronger wave 3 to the downside, and that we're still fleshing out minor wave 3 of intermediate wave 3, and that we're in for a significant downdraft. But we're getting some extreme readings on put to call ratios, etc. So that's why this is on my radar. We'll see. I don't think the bounce is going to be huge because we've already had a wave 2 that retraced 50% of wave 1. So wave 4 in here I'm looking at could come up, could come as high as the previous wave 4, but I doubt it. I'm looking at possibly a 38% at a max kind of thing. But first things first, we got to see how this plays out. All right, that's the S&P 500. Let's take a look at the VIX. Okay, so the VIX on Friday was down 5.96, but look at the VIX. Staying above that 10-day moving average. Where did it close? 66.04. So 2, 4, 6, 7 days. 6 out of the last 7 days have closed above 65. We are staying at a very elevated level, And this is the highest level of the VIX in terms of where it's oscillating in since the 2008 period in the crisis that was going on. And by the way, this close that happened right here, which was Monday, that was an all-time record close, high close on the VIX at 82.69, all-time record high. Even in the financial crisis 2008, we did not get a closing VIX of 82 as high as 82.69. Okay, so that's the picture on the VIX. Still very, very elevated. Let's take a look at the high yield bond fund. The high yield bond fund continues to scream risk off. When this is going straight down like this, it's basically saying, I don't have nothing to do with risk. Okay, now it's getting oversold, there's no doubt, but look how, yeah, it can get oversold. It can keep getting oversold. Okay, so we've come a long way. Let's take a look at the weekly view, and I want to, let me do something here. Let me zoom back out of this. Just want to show you some of the levels. Okay, so this picture right here, this is the December 2008 low right here. This is the February 2016 low right here. Here's where we closed, 69.75. We're down into the same territory of the 2008 financial crisis, where it was oscillating around and trading down in here. That's where we're at right now on the high yield bond fund. Okay, very, very negative picture. Okay, now let's take a look at the dollar index. This week, the dollar index screamed higher. It was up 0.07 on Friday. Just actually, when it was selling off, and the low on Friday was 101.09, and everybody's like, oh, well, here we go. It's collapsing back down. Not so fast. It rallied right back up. So this is like a rocket ship taking off right now. I've been wondering when I was going to get this kind of price action in the dollar. Okay, so I've gone back and forth, and this has been very tricky. But right now, I am leaning very heavily into the fact that I think we are in bull mode, and I think that we're in the third wave. This is just acting way too much like a third wave does, way too much like a bullish, impulsive wave does. Okay. We had a lot of chopping around this first wave, and then we got this, big zigzag that occurred in here for wave two. So right now, I think there's a high probability that we are off and running in wave three. Okay, ignore that little yellow thing up there. It's where we've got the waves placed is what's happened. It's just not in the right place. It's just up there in a placeholder. It's not in the right place. So this is the picture on the dollar. Right now, it's acting pretty strong. If this is really the case, if it's really in this third wave up like this, we're going to blow through this high that occurred back over here in January 2017. That high was 103.82. We closed the high this last week was 102.99, and we closed 101. Actually, that's in the aftermarket. We closed 102.82 in the regular session. Okay, so that's what's going on. All right, let's take a look at gold. So when I talk about relentless selling, that's what's been going on in just about everything. Oil, USO was down 29%. USO ETF was down 29% this week. Gold was down 11% over the last 2 weeks. GLD, down 11% over the last 2 weeks. Broke this major trend line in here. And I think the major move to the upside is done. Now, I know that when I was talking about this, well, let's see, I'm looking back, I think it was a couple of weeks ago, I was looking at this scenario, and I thought, here's where we were. I thought, okay, we're getting ready to head higher. I thought we had one more push to the upside in here. I thought we might get a little bit of a pullback right in here. And I actually said, if we keep pushing, we'll continue to push up into this wave 5, but we could get a pullback, and this is the pullback I was talking about, okay? So I felt like everything was projecting higher, okay? But here's where we know that this whole scenario was done, okay? That this fifth wave was ended, okay? Wave 4, or you cannot come back and overlap wave 1, Okay, so as soon as we did that, we knew we could not be in a wave 4 anymore. Right here, we kind of came right very close to it, but it did not overlap. The low was 147.05. The high right here was 146.82. So they did not overlap at this point. Once we came down and we overlapped wave 1, then we knew we weren't in fourth wave anymore, and we were getting a significant breakdown. And just to me, this just confirmed that this whole wave structure was done. Okay, so this is the picture we're looking at. And let me go to the weekly view so you can see what I'm talking about here. And yeah, it's a pretty short little fifth wave. It doesn't really matter from the bullish standpoint which way you look at it. We can look at it where I've got the triangle. We can look at it where I was using a zigzag in here as an A, B, C zigzag. We still end up with the same scenario. We're still getting a significant breakdown. You know, the Fibonacci ratios in terms of C versus A, we've hit those. C was actually, let me see, I think C was almost, actually, it's going, let me see what it ended up with. C versus A. Yeah, it's a little bit stronger than 100%. Okay, but you know, that would have been my next target is 138. But if you measure back over here, I think we were pretty close because you're going to get a different length C in terms of what you're doing. And we were just a little over 100% in here in the wave C. But right now, I think that this whole corrective move to the upside is done. And I think what we're looking at is this new big move to the downside. And it's a little early to really decipher what kind of moves are we talking about in here. What have we got? We got a little bit of a snapback. It's really interesting. The low here, when was that? That was Monday. The low on Monday came right in at about the low that occurred right here in November. And so we'll see what develops in here. It's really hard to decipher. A little bit oversold right now. But that's the picture. That's the update on gold. I think gold is toast right now. And why? I really have no idea in terms of, you know, why when you look at it and say, okay, there's a, you know, possible inflation out into the future. I guess maybe gold's telling you that it's not. Who knows? You know, there's a whole lot of debt that's out there. We'll see what happens. Basically, this is kind of like 2008. In 2008, they sold everything. Gold went down, oil went down, the stock market went down, everything went down. Real estate went down. And right now, it's the same kind of scenario. They're basically selling everything. All right, that's it for this weekend. If you felt like the video was helpful, give it the thumbs up. If you're not a subscriber, hit that little subscribe button and hit the little bell thing. You'll get notified when I publish a new video. And if you'd like more of this kind of information, we talk about all of these every day over here at joehenches.net, Beyond the Chart. And check out the website, check out the membership. Everyone have a great weekend and be safe.